Most people will work their entire lives, pay taxes on every paycheck, and still struggle financially, not because they're lazy, not because they lack talent, but because they were never taught how money actually works. In the next few minutes, I'm going to show you a legal wealth strategy quietly used by some of the richest families in the world. A strategy so powerful that once you understand it, staying poor becomes almost impossible. It's called buy, borrow, die. And after this video, you'll never look at income, taxes, or wealth the same way again. Stay with me. If you've ever wondered why some people build wealth effortlessly, why their assets keep growing while they pay far less in taxes than the average worker, this is why. The wealthy don't focus on income, they focus on assets. Let me break it down in the simplest way possible. The strategy has 3 steps. First, buy, second, borrow, third, die. It sounds strange at first, but the logic behind it is incredibly simple. Step 1. Buy. The first step is to buy assets that increase in value over time, not liabilities, not things that lose value the moment you purchase them. Assets. This can be real estate, stocks or index funds, businesses, even certain insurance policies or valuable collectibles. Here's the key idea. When an asset increases in value, you don't pay tax on that growth unless you sell it. That growth is called an unrealized gain. If you buy a property for $1 million and it grows to $2 million, you've gained $1 million on paper, completely tax-free, as long as you don't sell. The same applies to stocks. Buy $1,000 worth of stock, watch it grow to $10,000, no tax, until you sell. And in this strategy, selling is avoided whenever possible. Step 2. Borrow. This is where most people get confused. They've been taught that debt is bad, that borrowing means failure. But the wealthy use debt differently. They use borrowing as income. Why? Because borrowed money is not taxable. The tax system doesn't consider loans to be income, since they must be repaid. So instead of selling assets and paying capital gains tax, the wealthy borrow against their assets. Imagine you need $100,000. If you earn it, it gets taxed. If you sell assets to get it, it gets taxed. But if you borrow against assets you already own, you access the money tax-free. You keep ownership. Your assets continue to grow, and you still get the cash. This is how many wealthy individuals fund their lifestyle. Real estate investors refinance properties. Stock investors use portfolio loans. Some insurance policies allow tax-free borrowing. The money they live on often isn't income at all. It's borrowed. Step 3. Die. This is the final piece, and the one most people never hear about. When someone passes away, their assets receive what's called a step-up in basis. That means the asset's value resets to its current market price for tax purposes. Let's say someone bought a property for $500,000. Over decades, it grows to $2 million. They borrowed against it during their lifetime. They never sold it. When their heirs inherit that property, the tax system treats it as if it was bought at $2 million. If the heirs sell it, there may be little or no capital gains tax at all. Decades of growth, erased from the tax bill. This rule applies to real estate, stocks, and many other assets. And this is how wealth moves across generations with minimal taxation. Why this matters. The wealthy don't ask, how much can I earn this year? They ask, how many appreciating assets can I build? They design their lives so money compounds without interruption. They avoid unnecessary taxes. They let assets work while they sleep. And the truth is, you don't need to be rich to start. Even one appreciating asset matters. Even a modest portfolio counts. Even small, consistent decisions compound over time. The system rewards patience, ownership, and understanding. Final message. Wealth is not magic. It's not luck. And it's not reserved for the elite. It's built by ordinary people who repeat simple actions with uncommon consistency. Buy assets, borrow strategically, avoid selling too soon. Let compounding do the heavy lifting. This video is for educational purposes only, not financial advice. If you want to go deeper, watch the next video on your screen. Subscribe for more financial education explained simply. And remember, once you understand the rules of the game, you finally get to play to win.